The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, last Tiger Technicians Hour of the year of 2015. Been an exciting year, kind of ended up close to where we started, but that's not the point. The point is there's been a lot of activity in between. The Dow right now is down 119 at 17,484. S&P's down 12 at 2051. Comp index is down 29, 5,036. You've got gold up $1.30 at 1061. Silver's up penny at 1386. This is going to be very interesting because when we're looking at these different indexes, crude oil stuck at about 36.64. Bonds are up 30 seconds at 153 and 27 seconds. And you've got the dollar. Let me just double check here. The dollar is over there. Dollar has disappeared. Don't hide from me. Up 40 cents at 98.77, putting that pressure onto the gold. I had a couple of questions I'll try to answer. Let me just show for the 10-minute chart here. No technicals other than a couple of trend lines and some of my other techniques, but mostly there are no moving averages at all, no stochastic, no MACD. And I typed in here, rectangle formation can last a lot longer than your patience. And you went all the way from at 22, let's see, 1540, 22.3 on the 30th, all the way through the rest of the afternoon, through the evening, right up until moments after I posted this. I posted this at about 7:15 or so. Bam, 7:30, that low gets taken out. But look how long that sideways move was. That was really quite incredible. So now you've got a plunge to the downside, matching very much the price movement from the high that was made at 7:10 on the 30th in the morning down to that low that was made at about at 3:20 in the afternoon. Then you go sideways like a fulcrum, and now, boom, you go all the way to the downside. What's going to be impressive is if it's able to take out this very long-term, I'm talking about a 10-minute chart, remember? So long-term means it's maybe a couple of days. In fact, let's see when it is. Yep, right, I typed this in. Let me see if I can squash it as close as I can't. Okay, well, it's been there for a long time, and I typed it in before we came down to that level on the 28th. So the whole level I'm talking about here is around about 2045 in the E-mini. And that has gone into a full arch formation. Wow, I think it's an exact left side, right side price time match. Certainly time. Let me just do this. That is very interesting. So we're going to go to that peak right there, F. Let me double check that that is the peak. No, it's over there. Oh, so it's more. All right, fine. So that's going to be green. Oh, isn't this interesting? If you look, can't find it. It's there. Did I just eliminate it? Okay. And now what we're going to do is we're going to go to the pink. And I'm going pink, and I'm making a dashed line because it just shows up better that way. And you go to the, oh, look at that. Just a couple of bars later, and you've got another. So from D, you can go all the way down to that. Isn't that interesting? So there's a chance now that we might have made some kind of, at least we're testing a low intraday. I'm talking 10-minute chart, remember? And if that is the case, there should be a move in the E-minis above 2045.75. Right now they're at 2042.75. So 2045.75 will be the number. If it does that, then we could have a fairly quick move. I'm beginning to think that that's really too soon by 12:30 to test the high there of 2049. Well, I'll just keep it there for a moment. I don't want to take time other than to say visually it appears to me that it'll be a little bit longer, and it might be only to this level right here, 2047.25. So we'll be looking closely. And any Any pullback below 2040 at this particular point says, failure pattern could go into another sideways arch, a lowercase h that goes to a lowercase m, continuous pattern. All right, so we're done with that. Now let's get to the nitty gritties. Why? Because this is the end of the year. So let's look at monthly charts. And it's very, I said I'm not going to. I'm getting this newspaper out, and I'm going right back to where we were yesterday when I ran out of time. I said NTES, number one on Investors Business Daily list. No, this is the one right here. NTES. Making an A to a B. It could be a G/C right here as there's an arch formation. And that arch formation says we're still in leg B, a monster leg B, one of the biggest I've seen in a long time, going from 100. So there's A, 125 to the most recent high 3 days ago of 186. I would say that a 60-point move to the upside is a major, major move. And that's just a leg B in the weekly chart. Now, it could be a D because those are peak Cs. So we're going to have to watch this closely. But look at them. I said yesterday, the MACD is really good. The stochastic's very strong at 93%. Let me move the 120-minute chart away. And 120, this is the monthly. And the monthly is in leg D with still strong technicals. So far, it's acting very well. Could have a high-level consolidation. Any move above 186.45 says, yeah, that's probably going to be leg D, and then we'll have to watch it closely. TEL Education was the next one. XRS, I just begun that when we ran out of time. So I'm going to do it right now. Why not? XRS, peak F, short-term top, also a monster leg B in the weekly chart, and a possible leg F in the weekly. We're going to be watching these two characters very closely over the next week because a slide in from 46.44 underneath $44 would suggest that this thing has made some kind of a top that could be a fairly serious top. Stochastic and MACD, this is the Chapman wave squash. It should still go to a C. So far, the weekly chart says, it's acting very, very, very well. Next one is DY. XRS was TEL Education, GP, Chinese educational company online. And this is DICOM Industries, provides engineering, construction, maintenance, and installation services to telecommunications providers. That's very interesting. Look at this monster move, a leg E, and it's almost certainly, well, it absolutely is a peak E today because there's no way that by the end of the day it's going to cross 90.82 to start an extension of leg E. Peak G in the weekly and a peak D, and it's coming down quite sharply. This is something to watch. These major moves in Investors Business Daily top stocks. Look at Manhattan Associates, MANH. MANH? MANH. Made a peak E at 77.75 on the 7th of December, trading now at 66.89. Made a peak E in the weekly. But here's the thing. The monthly chart, unless it's a G/C, suggests to me that there could be a sideways consolidation, and there may be a test in January. No, January, if it goes above 77.75, it extends leg C. So it might be February. So this is one to watch because Manhattan Associates, a supply chain management software for manufacturers. I knew that I'd forget what these are, not retirees, retailers, transport providers. And whenever I abbreviate it, I've got to remember what the abbreviation is. So look at this. And there's a very interesting pattern here because it says the MACD is just turning down, but still very strong. Stochastic is lower than it was back when it was at peak D in 2014, but still very strong at 88%. And it's the daily chart that is dragging the weekly chart down. So we're going to be keeping an eye on this. And that's one of the reasons I'm going to get to the Dow and the S&P in a moment, why we've got to be aware that there are some stocks that have been leaders that are starting to show signs of failure. So we're going to have to look at a rotation into areas that can support a move to the upside after this. And I'll talk about that. I just want to do a couple more here. Dave & Buster's, play is the symbol, PLAY. A recent IPO came out back at the end of 2014 in the teens and went skyrocketed to 41. I think it was 43.20 or something, if I remember correctly. Yeah, 43.35, high in September of 2015. Pulls back and is real close to making a B. In the weekly chart, it really has to clear 43.35 to establish that's now a B in the weekly chart, if it's next week, this week or next week, and the same thing in the daily. That would take it to D. So it's acting very well. Dave & Buster's International Restaurants, US and Canada. Let me do one or two more. So this is acting very well, and I think it will be going higher. We've got Smith & Wesson, SWHC. And of course, this is in the, what do they call themselves? Manufactures firearms, including revolvers, pistols, rifles, and firearm-related products and accessories. Smith & Wesson holding, trading at 21.91, going into the sideways pattern. This is a rectangle pattern. It really needs to get to 290 to 23.20, and then it says it can have a rally towards the recent high. So peak D in the daily, peak D in the weekly, and peak leg C in the monthly chart. And this suggests it is going higher, acting after the recent spike to the upside, just going sideways. I believe it should be in a trading boundary between the 23s and the 20.50 area for at least another couple of weeks. That's the way I'm looking at it. Now, it's interesting because we have a stock. This is just a purely spec, we've got like a tiniest amount. It was more waiting for news on this particular stock. It almost broke even at the close 2 days ago. Now it's a bit under, but it doesn't matter. It's trading at 0.25. It's called Security Devices International. The reason why I was interested in this is because they have soft bullets. There's this whole thing about police not wanting to do their job as they perceive it, and potential victims dying, and possibly for unnecessary reasons, or maybe for necessary reasons. But as long as there's this association now that's going on with the cops and robbers, I said, well, let's find out. A Taser, T-A-S-R, Taser has come down sharply from its high up in the 35s down to the 17s. In fact, almost cut in half. There has to be some other way. So I heard this on the news. I heard it being discussed. I can't even remember why. I'm not sure if it was a business channel. I thought it was a local channel. So I looked at it and I said, this is a very interesting situation. Soft bullets. In other words, they are bullets that when they strike you, the actual impact, it's a flat head. So the head hits, and then there's the shock absorber system. So yes, it could hurt, but it doesn't kill. This is the pretense of the whole thing. And I'm watching it closely. So we're going to be watching this. I'll get into it a little bit more when we get back. Dow's down 116, S&P's down 11.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's down 119. S&P's down 12. And I had a question from Larry. And Larry wanted to know, good morning, Basil. Wondering if you could take a look at Microsoft today on your show and tell me what you see. Could this be a brand new leg A up in the monthly, or do you see it as a leg F? To go long, would you wait for a pullback all the way down to 50 area or somewhere else? Thanks, Larry. Okay. I'm including this now. I was looking at the Investors Business Daily, but this is a four-letter stock. So Microsoft, look at this spectacular monthly that went exactly to the month. Look at this. From the high in 1999, December at 53.97, Microsoft plunges down to a low of 14.87. And then, and this is to me always fascinating, I don't know how this happens, it starts to move to the upside. It goes peak ABCD, pulls back, starts another peak ABCD, goes all the way to an E, getting close to that level. But the target, I couldn't believe it. I mean, this is such an easy trade, and I never even saw it. I can't believe. Just a buy and a hold, because it was coming back. Everything was strengthening all the time. Even the dips had higher lows and higher highs. So the left side, right side price time match goes to right here, the high of November of 2007 at 37.50. Then it pulls down to 14.87. Then it starts to move back up. And it goes to an E, pulls back, and then it has this big spike to the upside. And this upside, I mean, at least for now, I'm calling it F. And it's a great question, Larry. And all I can say is the stochastics at 77. The MACD is strengthening. It's not as strong as it was when it was way lower at 49 at the peak E high. So I'm going to do this. I'm going to call it F for now. I probably, just for argument's sake, because it's so close to 80%, in the stochastic, I'll put this in and I'll edit it and I'll say F/A. It looks like General Electric. I mean, I don't know. I'm going to go one step at a time. And all I can say is, as far as I can see, Microsoft at this particular point in the monthly chart is holding very well, but it's a little extended from its 9-period exponential moving average. That makes me a little bit cautious shorter term. Now, why do I say that? Because it turns out that in the weekly chart, this is very quick, C to D to E, even B, C, D, E. And that always says to me, be careful, because you could get a bit of a pullback. Look at the technicals. Well, the technicals are very strong. MACD is way up there. The stochastic's at 87%, holding very nicely. So my thinking here is there's an alternate count F/B in the daily chart. And that's going to say, and there was a kind of a rectangle formation that broke to the upside. I'm thinking that there could be a pullback, but there's tremendous support between 55 and the 53s. So I would say, if you're not in it, Larry, I would just hold off right now. And you said all the way to 50 where the gap, there's this huge gap. I'm going to make two suggestions. One is kind of for now, hold off on Microsoft. It's had a big run. I would not be surprised if it did digest the gains. Give me an email or a call if you see this trading at 54.30 to 53.90 in the next 2 weeks. Anytime you see that, in case I don't see it, give me a yell, because that's going to be the clue. If it's able to make that, establish that as a base, then I'm going to say, hey, this is one of those leaders. But the weekly does say, I need a little bit of time. I might need even 6 weeks of a sideways consolidation, which could take me, meaning Microsoft, down to the 52s and just in a sideways trading range with slightly lower highs, slightly lower lows. So it's going to be very important if for any chance by next Wednesday, Thursday, Microsoft is trading at 57, it becomes a leader. And that's different altogether. Then you have to have a different strategy. I'll talk about it before if I see something like that happening. Okay, let's just one more I want to do here. We'll do two more. One is HA, which HA is, did I skip something? Yeah, HA is Hawaiian. Is that Hawaiian Holdings? Passenger and cargo service, major islands of a Hawaii airline. Same thing, leg F/C in the monthly chart. MACD is a little stretched, but it's still very good. Stochastics at 87, starting to show it's got a little bit of resistance. A, B, C, D, E, F. I think it's F in the on-balance volume. That says that this is probably a peak E, closer in matching in that Microsoft chart. But anyway, peak E, still very good, but it is pulling back. I would not be surprised if Hawaiian Airlines trading at 35.50, down 98 cents. HA, if it takes out 34, I can see it trading between 35.20 and even 31.50 in January. And a peak D in the daily. So this one is in a sell mode in the daily. Maybe by the end of the day, it'll be a sell signal. Not really. No, it's not a sell signal yet, even in the weekly. I'll be back now. Dow's down 118.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, and if you look, so that's, you remember Microsoft, okay, and Hawaiian Airlines kind of pulling back in. You wonder about that with oil prices so low. Facebook has made this rectangle formation. We spoke about this a while back. Is this a new B or is it an F in the weekly chart? Because there's a leg E in the monthly, and that says, okay, you got to start being a little careful here. But so far, it's just really sideways. Facebook changes its character completely at 105.57 down 65. If it starts to take out the 101 to 100 support in January, if it takes that out and goes to the 99s, that says, timeout, 94 would be a target, the 9-period exponential moving average. On the upside, I don't think you have to actually wait for a new high of 110.66. 110.65 was the previous high. All you need to do is to get into the 109s. You're at 105, well, 108 actually. Just touch 108, and I think you've cleared a bunch of hurdles, and that says there's enough room to have at least a bounce to a slightly higher, not a magnificent breakout, but just a slightly higher high, somewhere in the 111s, and then maybe start a bigger pullback. So this is a very interesting period for a lot of stocks that have been had done very well, and then went into a sideways pattern. And so STZ is one that I wanted to bring up today. I haven't actually looked at it for a few days. So that went to a peak 144.84. It went to 144.87. Is this an alternate count F/C I want to talk about this in a moment. I haven't watched many of the financial shows for quite a while now, but I happen to see. I got in the middle, I guess, in the middle of an interview that Kramer was having with the CEO of Constellation Brands. And this is spirits, beers, wines, all sorts of, anything to do with the liquor range. And I was kind of impressed with what the guy was saying. It was every single thing, every single category, they were knocking it out of the park, the guy said. They were the leaders of that category, just about even the new categories that have evolved over a period of a couple of years. He said, "Oh yeah, that's our brand. Look, there's that brand little behind the other, hidden away. Pick it up." And yep, he says. So I'm looking at this, and I'm thinking. I remember a year ago. It was just over a year ago, November, I think, maybe a year ago. I was giving a talk somewhere, and I was asked about STZ, and I hadn't actually looked at it in a while. I had looked at it very closely for quite a while, and then it just sort of went off my radar. There was another company that was taken over, BEE something, BEED, I can't remember, something with a BE, and that we had in our portfolio, did very nicely, and then we were out of it and then got taken over. And so I watched the group. Now, I'm looking at this and I'm saying that is the most steady move to the upside. This is a really bullish monthly chart. So I'm looking for the weekly and the dailies to give me clues about STZ for the downside. So far, I can say that it's getting extended, but overbought can stay overbought for a while. Now I get to the D and a quick E in the weekly, and I say, aha. The stochastic's at 81%, good, but not as good as it was just recently. The MACD is good, but not anywhere as good as it was at the peak E that was made somewhere in April. So, and then the brand new buy mode began. So, the reason why I brought up this guy, I mentioned STZ, he's at it for ages. In fact, he buys and never sells. I don't even know why he was there. I don't even know why he was asking me any questions. In fact, afterwards, when he came up to talk to me, he says, I go to all these things, but I never sell. I don't know why I even buy. I just go for the company. And I couldn't even tell you. He had another guy there. Another guy said, you know what my cost average is on Apple? $8. I said, $8? Yeah, he said $8. And I'm still holding it. So, yeah, I love that kind of thinking. Let's just buy and hold and forget about. And if it's a Rip Van Winkle trade, if you stay that way, that's fantastic. I think in the very long run, maybe Google's going to turn out to be something like that. Whatever you overpay for today, maybe in 10, 15 years' time, you or your children, your grandchildren will be looking and saying, wow, Papa whatever, or what, Grandpapa whatever, what a wonderful man, left us this legacy. So, all right, so STZ is getting a little toppy. I don't have a signal yet. I have it coming very soon in the daily, and that's going to impact the weekly. But I can just give you numbers. I can just say that if Constellation Brands A, trading at 143.09 down $1.08, breaks above is at 143. For whatever reason in January, if it takes out 148, this thing is going to skyrocket and just keep going to the 150s because there's really nothing. There's nothing overhead to stop it, and it's a leader. And it's people come back from the year 2015, take a break, come back, and they look and they say, that's what we want. We want the best stock in the group. And that's what they'll be buying, at least for the first couple of weeks of January, if it breaks out. On the other hand, instead of those 3-4 points up, if it's 3-4 points down, then it's sideways, and the key level will be 135.34, the low of the week of the 18th of December. So I thought I'd go through a couple of things that really struck me as being kind of something you want to do at the end of the year. A question about Google. I don't know if I actually updated the Google. I'm having a terrible time. Alphabet? Am I going to say this now forever? Alphabet? Where? Alphabet? Where did they come up with alphabet? Alphabet? I'm having a tough, you can tell I'm having a tough time. Google. I remember when Google became really popular and I said, it's amazing how you can take a name and it's just so obtuse or sounds so stupid or it sounds out of context. And eventually you can turn it Amazon. you can turn it into a single word description of an entire enterprise. And that's what Google did. So I don't know what this alphabet is. This is their trading stock, H stock. Anyway, it's just gone to a B. Oh, so this is a brand new D. Alternate wave, and we've got ourselves to a D in the weekly. So we're going to be watching these stocks. Technically, they're overbought, but they're in the category of demand. So I'm going to say A, B, C. I'm going to call this B right now in the daily for Google L, trading at 783.75, down 6. I should give it an alternate count, but that alternate count would still be C if that's going to be my the low. Back in November is going to be the low. Then F would be an A, G would be a B. Pull back. We didn't take it out, so this is still running, and that's a C. So that could be a C. So I don't know what's going on here. I think the stock is great. Short is not a short in this category at this particular time. I've got a feeling in January I will be looking at it as a potential sell signal. I don't really want to short a Google stock at 783. There are other stocks at lower prices that I think would give you much better bang for the buck. Okay, I just wanted to quickly look at, you remember what I was showing you, that V-shaped pattern there it is. So now we're in B, and I changed the location of the left side, right side price time match, and that says it should get to, the E-mini should get to 2044, the high of 10 past 11, and it should get there by 12:30, 12:40. So that would, but if I was very strict about it, I just didn't think that I could be strict. I'm going to be strict right now. I'm going to change this and go to the center right there. And look at this. This is you got to believe in your system. Don't make changes. Look, there it is. That would have been an exact left side, right side price time match. So it's 1 bar late. We've got exactly there. We got there exactly 1 bar late. And therefore, I have to go back to the strictures of that left side, right side price time match for the 10-minute chart. Let's go right to there. All right. If this is going to continue, if we've seen the selling, most of the selling for the day, because we broke the arch formation and that long-term resistance at 2044, let's see how that becomes. If it can become support, then we're looking at 10 past or 1 this afternoon, trying to get to the high that was made at 2049.50, and that was at 9:20 this morning. We'll see. Okay, that's just, I'm showing you chart patterns that sometimes work, just based on nothing else but the V-shaped pattern and the arch-shaped pattern or cup formation. So, okay, we've got that out the way. The question that Jen was, I saw a question there. Yeah, maybe another company will be Thesaurus. Good one, Albert, for Google. So in all time frames. So I did the Google L. I'm calling it C for now. It's really, this kind of pattern is usually not a G. Everything about it says that it's in an uptrend and it should go by February or March, it should make a D to a higher high. Okay. And the D in the weekly says getting a little choppy here, but there is no technical breakdown, but there is a technical trend change if the MACD goes negative, and it isn't right now. And if the stochastic closes on a weekly basis below 80%, that'll say, okay, be careful. You might be making a short-term top. All right. So we've got that out the way. Couple of things I promised myself I'd do. Let me look at my notebook. Notebook. I do the STZ. I typed that in. I remember. There was a question as to the VIX, because I've been very clear about the VIX as far as I'm concerned, using my methodology. So the VIX index is at 18.19. This morning's high was 18.52. It's in leg B. The stochastic is trying to rally. It's made this W formation, but it can't. It has to be in the 20% area, and right now it's struggling to get there. It's at 18.36. The MACD histogram is improving, but the MACD has not crossed positive, so that's still an outlier that says we've got nothing there. And the weekly chart is still a negative technical picture. So today's close will be very important. Why? because the 9-period moving average in the weekly chart is right at, I hope I can get that exact, at 18.09. If I hit that, will I get the price? Yes, $18 is, and we're trading at 18.01. If by the end of the day, and I suspect we've seen the low of the day, I think buyers are going to come in now. I don't know how deep it'll be, but I'm suspecting that we will go to a better price over the part of the rest of the day. Then we could see the VIX index on the weekly chart close again under the 9 EMA. If it closes above, I've got to say, hey, watch out for next week. Let me just go back to this chart here. Wow. There, just smashed through the, wow, that is so interesting. Thank you. In leg B, and we've got a left side, I don't know if you can get there, but we've got a left side, right side, price, time match. Now, you remember, for those of you who are looking in the den, remember I did this? This is the VIX trading vehicle, 200% long the VIX, and I had a peak here at 6.29 right there. I gave it a peak D, and I put in a plus sign, and I put in that trend line, Chapman wave inside wedge target price line. Well, look what happened. We've just come down, and we've come down very sharply, now trading at 608. So that, and we're trying to fill in the gap there. This is going to be very important to watch. And the converse is, wow, look at that. Nice move, only down 6.75 in the E-mini. So, okay. So far, end of the year is always a little toss-up between people positioning themselves for the first week of January. My suspicion is that all the selling is done. Now we'll see if there are buyers left that want to position themselves on the long side. The fight is not over, but I think we've got a very good chance of moving higher. Also, we were taken out of our 300%, our small 300% long position of the Dow, just taken out. That's always a sign that for a nice profit, but not anything like it was 2 days ago when we gave back 2 points. But that's a good sign. I mean, I don't mind. We've got other longs, and we've added to the short side. I believe that this is a great period for being stock-specific, index-specific, and if you're able to trade, Larry's expression is always trade what you see. If you're able to trade that and you're picking the right trends, I think this is that kind of a market. It's just going to be, I got emails saying, watch out for January. It's going to be a really whippy January. Hey, whippy? Look at this. How about this? Remember, we were going up and down and up and down the channel. The reason why we want to be long, mostly long in this particular move since a week ago, Tuesday morning, is because we wanted to trade the rally from the pink line like you did over there, up and down, up and down, up and down, up and down. Same thing since the high of November the 3rd at 17,977 in the Dow, we've made lower highs and lower lows, lower highs and lower lows, lower highs and boom, we went right to the resistance. But I see enough technical strength here to say this could just be a little peak B, and we should be trying next week for a leg C. Hey, I could be completely wrong, but I'm thinking that next week we go above 17,750, and that'll be the breakout of that pattern. Be very important. So Terry says, my sister worked for Fifth Third. You know, what a name. That's the bank, right? Can you imagine calling yourself Fifth Third or whatever it was? It was just, that was a weird name. It took me a long time to get used to that. I suppose by the time you get used to it, it gets taken over. I'll be right back. Dow's down 70, S&P's down 7. I'll be right back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Basil Chapman. We're back. Dow is down 70. S&P's down 8. So this is what we're looking at. Your question about UNG. Let me get to that. UNG, excuse me, UNG trading at $8.79, up 40 cents. A nice gap up and maintaining that gap. And what I said to Sean in the den, this is the first positive divergence that we've had in the weekly chart just in ages. And that's the MACD held beautifully way above the lows in March and April on this recent pullback. Very, very sharp pullback, almost like a propeller shaft in the weekly chart, where this is the fulcrum right here in the 14s. And now it's gone down with a low of $6.91, and it's trading almost a point higher. I like the action. The monthly chart has a divergence, but that one I have to exclude because it's based on other factors. And the reason you see the MACD soaring like this is because of where it came down from and other factors. So I'd rather go with the weekly, which I think is far more accurate. And what it says is if by Monday or Tuesday you haven't taken out the 8.50, 8.40 support area, preferably 850, then what would happen is that you can see a move that takes you, especially if by today or if it's today, it extends leg B above 8.87. But if it's Monday, and that hasn't taken out, that'll be leg C, and that will project to the 9.20 area. But what I'm really thinking is that if you take out, you start this next leg up, it should go to between 980 and 10.12, somewhere around there. There was a gap. What was that gap? The gap was 920 high and 936 low. To get to that gap, a lot of work has to be done. But towards the gap, yes. So I'm thinking I would do a left side, right side. I do it here. So I'm looking at this. You know, I don't want to rush this. Probably I can do it over the weekend, nicer. But I'm looking at possibly that to that left side, right side price time match. Make that green. I think I missed the bar, but it doesn't matter. It gives you at least an idea. Yes, that's what I'm looking at. I'm looking at, oh, it doesn't go further. I have to go format to the right, make it 11. There you go. Okay, and that says if I'm correct about this move now in a V-shaped pattern, even if it's a little bit of a W pattern, you can take this line right here and say by January the, there you go. By January the 13th, there's a good chance that you're trying to fill the gap between 9:18 and 9:30. There you are. So it could do it sooner, but I'm saying that's kind of the way I'm looking at it. Now, before we wrap up, let me say thanks to everyone here at TFNN. Just great help all around. A wonderful crew. Thanks to Tom O'Brien. Thanks to Tommy O'Brien. You guys have been fantastic. And let's see if we can go from strength to strength for 2016. And don't forget, we've got new programming. We've got new lineup here starting 2 days a week at 7 o'clock. I hope everyone has a fantastic new year. But most importantly, I hope you have a healthy new year. Of course, to me, that's really important. Let me look at this V. Oh, look at that V. Nice rally in the E-mini. Going towards that target that we had in a shorter time period, 2.49.50. So days young, anything can happen. And I think I'm beating the clock for a change. Yes, I am. But I did want to get that out and just say thanks to everyone involved and certainly to my subscribers and to listeners. You're the ones that make this possible. And once we're here, without your response, I don't have to tell you. I mean, it's like talking to nobody. This way, we're talking to someone. We're talking to people, real people. We get responses, a lot of emails, a lot of questions, a lot of calls. We love that. That's really what we're about. So thank you so much. Look at the way that the E-mini is climbing here. Remember, I had a Chapman wave, trim gauge flashing to suggest that be careful at any point from the low that's made today. We could have a 9 to 11 point rally in the E-minis. This could be unfolding as we speak. Resistance coming up as we speak. Hey, stay tuned for programming, and I'll be back on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,